Obviously, in supply zones we sell, and in demand zones we buy. Supply zones are just prices or a range of prices in which sellers are willing to drive the market downwards, whilst demand zones are what? Ranges of prices where buyers are hoping to enter a trade and carry the market upwards. So let's get into it, okay? So before we can identify a supply and demand zone, we have to know that there are specific features we have to see. There are things that makes a demand or a supply zone valid. Now these things are all. The things we look for are imbalances. Imbalance move of 2:1 or more. Now when I say imbalance, imbalances are open price ranges where price is likely to tap to go and tap it back after it has traded away from it. I'll explain that in a minute. We have to see a break of structure, and number three is actually controversial. Consolidation before the push, which is the imbalance. Now let me show you. When we say imbalance, an example of an imbalance, when we look at this, when price rallied up, you have this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles going straight downwards. 10 what? Bullish candles, and we are on the daily. So that shows that price really drove the market down and changed this trending move upwards, which was once bearish into which was one bullish into a bearish structure. Again, we have another imbalance right here. They are strong moves, you can see. And what I mean by 2:1 is when you look at this, two candles right here. This green candle shows what? The bullish movement, which is price going upward, and this red one obviously shows what? The bearish movement. Now after this red candle appeared, you can see it went away from this bullish candle with 1, 2, 3, 4, 5 candles. So this is basically a 5:1 movement away from this bullish candle right here. That's what I mean by 2:1. It should be 2:1 or more. That shows a very strong imbalance. Also, a, a break of structure. Let's explain what a break of structure is. Now, a break of structure is just a change from one phase of the market to another phase. What I mean is when we are trending upwards, we are in an uptrend, and when so far as we are not breaking the lows of the market, we are still in an uptrend. But as soon as price breaks the previous low, as soon as price breaks the previous low like this, that means we are about to change structure from what? An uptrend to a downtrend. We are about to change structure from what? An uptrend to a downtrend. So price will then go something like this, forming a lower low, a lower high, sorry, a lower low, a lower high, a lower low. So we have this higher high, higher low, higher high, higher low, higher high, higher low. Then price will change into a lower low, lower high. Yes, that's what I mean by a change of a break of structure. So right here you can see this was when price broke structure. So you can identify this as a break of structure. Yes. Now a consolidation before a push. Now this is not always necessary, but because for example, when we say consolidation, you know consolidation is just price that is refusing to go up or down. Price is not going, it's not making any significant move to the upside, and also the same price is not making any move to the downside. So an example of consolidation is this open price right here. Now as you can see, price was ranging within this box. It was just consolidating, and there was this push. So this push is what is we call an imbalance, and this is what we call the consolidation. So sometimes this is bound to happen before price is being pushed to the downside or the upside. So these are what makes what a zone valid. An imbalanced move of 2 is to 1 or more, that moves to break structure, and then when we have the consolidation before that same move, that also makes the zone valid. Now let's move on to the chart and let me show you examples of zones and how price reacts when it gets into the zone. Now you should remember these zones work on every time frame. On every time frame, you can identify demand and supply zones. But also, what you should know is the higher the time frame, the solid the demand and supply zone is. Now when we are on the AUD USD right now, AUD USD right now. Now when I zoom in, you can see here we have price was in a downtrend, right? We have this lower low, lower high, lower low, lower high, lower low, and price broke this structure right here. Price broke this structure right here, right? So sorry. Price broke this structure right there. So with that, we can label this as a supply zone, right? Now when price came back into that zone, price went up, it rallied up because this demand zone is where buyers are trying to buy, are trying to take the market higher. So as soon as price enters into this zone, then we go down to the lower time frames and look for buying opportunities. Again, price broke this structure right here. You can see another valid demand zone. Why is it valid? Because you can see that there was this huge imbalance, which huge imbalance of 1, 2, 3, 4, 5, 6 huge candles, which took out this structure right here. It broke this structure. So as soon as price came back, there was this little hiccup here. There was this little hiccup, but it's not always that price is going to hold. But this is also considered as what? A demand zone. Now let's move on to another example. Let's go on to the 1 hour chart to show you that demand and supply works on every time frame. Okay, now there's this beautiful demand right here. There's this beautiful demand right here. Sorry, we had price consolidating for a bit, and there was this huge movement to the upward. There's this huge upward move which took away this structure. It broke this structure, this downward structure. So we have a demand zone forming below this, and there are so many ways of drawing demand and supply zones. Some people take this whole consolidation move and just draw and then just drag it all the way to the next side. Others also just kind of take this last candle before the up move, the move to the upward, so the last candle. Anyhow you draw it, through backtesting, you know which way fits you what the most. Through backtesting, you're able to find your style of trading, whether you have to take a whole consolidating move or you're just going to take what the last candle before the push, or yeah. And also now we have this consolidation right here, this nice beautiful consolidation, and this downward movement, which forms what a nice supply zone right here. So we have this supply, we also have this supply. There are so many supply and demand zones which trends throughout all the charts. We have this, we have this demand, we have this demand, we have that demand, and as you can see, all the zones I'm pointing out, they have one thing in common. At least they have huge imbalances. Huge imbalances. That's the key to what, to show you that the zone you are trading in is truly legit or not. Now look at this. Look at this zone right here. Now as soon as price tapped into it, there's obviously liquidity below. That's why price just broke this zone a little bit. But as soon as price just tapped into it, there was this huge movement to the upside. There's this huge movement to the upside. Now I want to show you guys. I want to show you guys something beautiful. When we are when we are trending upwards, so we obviously have this what, higher high, higher low, higher high, higher low, higher high, higher low, then higher high, right? Now demand zones are zones where buyers are looking to take the market was higher, right? So as soon as prices come back, the zone that is formed, that's what we call it. That's what we call a demand zone. So as soon as price drops back, we buy. As soon as it drops back, we buy. As soon as it drops back, we buy. And when the buy, or when the zone is able to produce price to break the previous highs, then our structure is really solid and we are looking to buy on the next zone. So we are able to break what? We are able to break the lows before we will be like, okay, so price is changing from what? An uptrend to a downtrend. But so far as we are not breaking these lows, so far as we are not breaking the lows of the trend, then our our zones are very, very valid. Same goes for supply zones as well. We are on the lower low, we are having this lower low, lower high, lower low, lower high, lower low, lower high, lower low. And there is this break of structure, break of structure, break of structure, showing us that this market is still in a downward movement. It's still in a downward movement. So as soon as we have this low, as soon as we have this imbalance, we take now we have the imbalance or we draw the zone. When price comes back into it, we sell. As soon as price comes back to it, we sell. Just like that. So let's look at something on the daily when we are trending. So we have this higher high, higher low, higher high, higher low, and price just gave a little push to upward and broke this this low here. So as soon as we broke the low here, we saw that price made a was lower low, lower high, lower low. So that's just how the market moves. So it's going to make another lower low, it's going to find another demand and make a lower high and a lower low, just like that. That's how price moves. So that's it with the video. You should note these three things as a demand and supply trader. You should know that all your zones you have to draw should have an imbalance move of 2:1 or more. Not every zone is valid. Not every zone will work. Trading is a probability game, so you should be aware of that. The zones should break structure. The imbalance should always break a structure to the left to show you that it's valid, to show you that there is momentum in that zone, that buyers or sellers are willing to take the trade, to take trade within the zone. And when there is consolidation before the push, it also shows how valid your zone is. Okay, so I hope you guys get it. When you have any question, you can comment under this video, put your question, or just text me on IG. I'll reply. Thanks for watching, and like, subscribe,